Hey guys, PK here. In this episode, we'll be talking about the next 3 years, 2022, 2023, 2024 property market, some predictions, right? And why they may come to pass. So if you're looking to buy property, you already have a vested interest in a investment property or owner-occupier property in Australia, this video will hopefully bring you a good angle, a good perspective, some rationale of why you're in for some good times over the next 3 years. Look, my name's PK and I help build people passive income using data without needing a $15,000 buyer's agent or property company every single time. All right, and if you get value out of this channel, hit subscribe, turn the notification bell on and give it a like. I would really appreciate that. That gives more people the opportunity to understand, learn, and educate themselves using content just like this. All right, let's get into it. So what you're looking at here, the source is Pricefinder, Biz Oxford Economics. So these are national companies, very reputable, far more reputable in their prediction capabilities than the big four banks or Channel 7 or Channel 9 or news.com.au, Sydney Morning Herald, etc., etc., etc. You get my point. This is a legitimate research house, not just clickbaity media. So what they're saying is a median house price growth out to 2024. They're saying this gray bar, which is Brisbane, that will grow the fastest over the next 2 to 3 years at an average of 6% per annum. That will be followed by Perth and then closely followed, according to them, by Melbourne. Okay, Sydney will be down here. The worst performers will be Hobart and Darwin, and Canberra and Adelaide will be, kind of middle of the pack over the next 2 or 3 years. My opinion, I've shared it very openly multiple times. I think it goes for the next few years, putting aside regional where, some regional areas are going to go up 20, 30, 40% just this year, 2022. But putting aside regionals, I think it will be Brisbane, Adelaide, and Perth. Those will be the order, and that will be where the best gains are to be made. In terms of unit price growth, once again, they're saying Brisbane will lead the pack, followed by Hobart and followed by Darwin. Okay, so one key takeaway so far that we can see from this is that in general, units, you can see these bar charts are between 3 and 4%, will lag house prices or detached homes, which are generally between 3.5% to about 6%. All right, you can see the chart on the left is much more stronger than the chart on the right. So immediately the inference that you can draw, and there's exceptions to this, the inference that you can draw is if you want to be safe, if you want to be lowering your risk, if you want to develop an investment thesis which is somewhat calculated, avoid units, by and large. There's always exceptions, but avoid units, stick to standalone houses. All right, and they're very affordable if you look outside Melbourne and Sydney. And this is what the rental market will be according to the state governments, according to the real estate institutions, according to Biz Oxford Economics. Median 3-bedroom house rent, and look, the average house in Australia is a 3-bedroom. All right, so yes, there are 2-bedroom houses, yes, there are 4 or 5-bedroom houses, etc., but the average is 3-bedroom, and so that's what they're going with here. The forecast is a pretty rapid growth in rents. Okay, so for example, if we look at Brisbane, this one here, this gray line, it is just about here. This gray line is expected to grow. I mean, they're all basically growing at a very similar rate of growth. So linear growth, rents are going to get higher and higher and higher. What does that mean for property investors? What that means is that our passive income gets larger and larger and larger. This is the capital growth story. Our assets will grow in value, and this is the rent story. Our passive income, our positive cash flow will grow. So if you're on the fence of buying or not buying in 2022 an investment property, I mean, you're not only going to be increasing your net wealth or your net worth or your net assets based on the capital growth story, you're also going to be increasing your income, your residual or passive income that you don't have to do anything for outside your business, outside your job. So it makes for a pretty no-brainer type of story. Now let's have a look at units. So median 2-bedroom units, the average unit in Australia is 2 bedrooms. Yes, there are 1 bedrooms. Yes, there are 3 bedrooms. Average is 2 bedrooms. So once again, by the similar sources, they're all, the consensus is that, once again, rents will rise. Now that hasn't always been the case. You can see here for Sydney, rents have actually dropped in the preceding 2 or 3 years, but they're likely, and they definitely are, rising already. However, what you can see is the trajectory of this rise is expected to be much more shallow or softer than the trajectory of the rent rise for 3-bedroom houses. Okay, so once again, the inference from this is that if you're investing to build cash flow, to build passive income, to build a residual income stream that you can fall back on or ultimately replace your income with, houses in general, exceptions exist, houses are your best bet. All right, so if you're in Sydney, Melbourne, and you're thinking, I don't want to buy interstate, I'm fearful of looking interstate, let me just buy something in the city that I live, the only thing I can afford is a unit, I would strongly recommend that you don't do that. I would strongly recommend that you look outside where you live, where you can buy houses sub 5, sub 600, sub 400,000, sometimes sub $300,000. You can still do that, and they're likely to perform much better both for capital growth and income than our units. Okay, so if you're getting value so far, guys, hit subscribe and give it a like. That way it's going to be useful for me. I appreciate it a lot. The other things that I wanted to just mention here real quick is these are just the averages. All right, so Brisbane, the average growth over the next 2 to 3 years, 6%. Now there will be suburbs that grow at 1%, at 2%, maybe at 3%. There will also be suburbs that grow at 9%, 10%, 11%. There will also be suburbs that grow at 20%, at 21%, at 22%. So don't just extrapolate this and say, look, if I buy a $500,000 property, if it's growing by 5 or 6% per annum, in a few years' time, that 500K property is only going to be worth 575. That's not the way to approach property investing. You want to beat the average, all right? You will beat the average by being educated, all right? And by beating the average, that $500,000 property that you buy in 2022, by 2024, it will be worth 650 or 700 or 750. That is the name of the game. All right, beating the average. That's always been the name of the game. Hedge funds, for managed funds, for index investing. You just want to beat the market. It's no different in property investing. You want to beat the market. Same goes for rent. All right. The second thing that I want to mention real quickly is that, oftentimes people have this fear of investing interstate. I know it. You all think that, you might think that investing interstate is really difficult, is really, there's so much risk in there. How am I going to inspect the property? How am I going to do my due diligence? What if something happens? I'm so far away. I've addressed these issues in multiple videos before. You don't need a buyer's agent to buy or manage a property interstate. You can do this yourself just with the right team, which is basically free, like Property Managers. There's so many videos. I'll link one at the end of this video. But the point I'm making is that you need to become a borderless investor. Now, most of you live in Sydney. A lot of you live in Melbourne. If you live in Sydney, you are likely, according to this, to experience a 50% less growth rate compared to Brisbane. All right? 6% versus 4%. Now, extrapolate that over 4 years, 5 years, 10 years, etc. That difference is hundreds of thousands of dollars. So to really build wealth, you need to be a borderless investor. You follow the data, you buy where the next cycle is about to happen. You don't look in the rear view mirror and say, Sydney's grown the most in the last 5 years, hence I will buy in Sydney. The rear view mirror doesn't tell you what's happening in front of you. It tells you what's happening behind you. History does rhyme, but it doesn't always repeat itself. Okay, so for those of you in Sydney, I urge you, become borderless investors. You don't need a buyer's agent for that. So many videos that I've explained why you don't need one. But really, the husband might be pulling back the wife, the wife might be pulling back the husband. There's preconceptions, there's so much fear of doing this, being a borderless investor, buying outside where you live. But it is absolutely essential if you want to build a property portfolio. Once you get to 5-6 properties and they're scattered across Australia, at any one time there's at least 1 or 2 or 3 properties that's growing in value, right? So even if my property in Newcastle isn't growing today, my one in Brisbane is. Even if my one in Melbourne isn't growing today, my one in Geelong is, just to use some examples. So you're always building your wealth regardless of the property cycle. Okay, so obviously it all comes down to suburb selection. This is just state or city level commentary so far. Even in Brisbane, where it is expected to grow faster than any other city, there will be suburbs that underperform, these other cities. And there will be suburbs in Perth, let's say, that outperform even Brisbane. There will be suburbs in Darwin that outperform Perth. So this is just very general. You need to be honing in using data. You can do this yourself, doesn't take long. You can use data to hone in on exact suburbs. But this is some high-level commentary that at least hopefully tells you, don't wait on the sidelines, guys. All the most intelligent analysts, the people using data, not the clickbaity news headlines, they're all saying that property prices, despite the likelihood of interest rates going up, despite probably COVID Mark 10 or whatever we're up to, despite all these distractions, these noises, property prices will still go up, but more sustainably. Okay, become like a racehorse. They put those blinkers on the horses, because if the horses look right or left while they're racing, they're going to start knocking into other horses. They get frightened, they get distracted, they're not going to run hard. You as property investors, as future property investors, need to have those blinkers on, those blinders on. Focus on the goal. Focus on the data. Don't get distracted by media headlines. That's my message. My name's PK, and if you want to level up your learning, I'll leave links to a free Facebook group below, free podcast below, and please, please, please give it a subscribe, hit the like button. That way more people will get this message. Okay, guys, catch you later. Bye.